Hi there. Very good morning and good afternoon, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session today on Sunday to discuss about Frontier Springs and also discuss about the markets and answer your queries. So, a very warm welcome to this live session. So, the Frontier Springs stock have come out with results just recently on the weekend, and they were not good. So, I'll discuss about what needs to be done in the stock and what lies ahead. A disclaimer: I'm invested in the stock, so I'll discuss that. Let's have some people join in first, and I'll discuss about this stock. Plus, I want to say that as expected, autos and auto ancillaries are booming. Those stocks are performing very well, and probably my take on that sector is that probably hold on for the next 4 5 months. I think the surge will continue, and the surge will take the stock even higher from these levels, the levels that they are trading at the moment. So you can easily make 20 to 25% in these stocks. Uh, of auto ancillaries at least over the next 4 months or so. So that's my understanding about the auto ancillary space. Coming back to Frontier Springs, so surprisingly, probably, but not quite surprisingly for some, the results of Frontier Springs were depreciated. So I'll just give you a snapshot of how the results have been. It came out with around 17.5 crores of sales versus 28.5 crores of sales in December quarter of last year and versus 22 crores of sales in the last quarter. And that is the most, you can say, negative feature of the result that the sales have dropped substantially from the September quarter, and the December quarter has not been that great. Year on year, we can understand that the results are not that great, so that is understandable. But one has to understand that over the last one quarter, the results should have been better Q on Q, as it was the case between June and September. So June and September, they had a growth of 25 30%. So we as investors thought that the results would continue to be better for the December quarter. But what had happened probably, and these are all my understanding of the results because we have not heard from the management as yet, apart from one statement that I'll clarify later on. But what has happened probably is that there were back-ended sales or back-ended, you can say, orders that got completed in September, and there were no greater fresh orders that came in for December because most of the railway stocks or most of the railway itself uh, had an understanding that the business might not pick up or the railways may not open. So probably from the government or from IRCTC, from the Indian Railways, the business wasn't that great. So the business that came in was not coming in because of the understanding that railways may not open for the next 3 6 8 months, and so there was no fresh coaches that was available to be made or roof sheets, etc. So that's my understanding, and that is why probably the December quarter has been a lull. Probably March would be better than December because there is rumors and there are talks that not rumors, but there are talks that in April uh, trains will open up, and once more trains run, then there will be more wear and tear, and there will be more need for more roof sheets and coils, etc., that the company sells. So that's my understanding as to why the numbers have been depressed, and we as investors should have probably known by now that the numbers are ought to be a little depressed. Coming to the profits, so profits were around 15 point. So the profits were around 1.9 crores versus year on year 5.7 crores and quarter on quarter 3.2 crores. So a great drop in profits of around 27%, drop in sales of around 35% quarter on quarter, and that is a real drawback for the stock. I'll discuss about what the stock can do, but coming back to the numbers, the finance cost remained stable, slightly got higher. And what is more interesting is, or a positive in this, is that the expenses have been curtailed to a greater extent. what has happened is total expenses for this quarter has been 15.7 crores versus 22.9 crores, 23 crores in December of last year. So the expenses has also dropped by something like 35% or so. And that is pretty good because overall going forward, we feel that the expenses will remain curtailed. And if they get some orders going through, and if they get some businesses going through, we could see profit numbers surging from March onwards. And I'm pretty confident from June onwards things will look even better. One more thing and a very important point I want to add here is if we come to the notes of the results, then at point 6, they have talked about the COVID impact and everything, and they have talked about taking that into account and so on and so forth. After that, they have also said these lines, and I want to just read these lines from there on in. So the company has taken into account the possible impact of COVID-19. So they did talk about it. And then later on, they said that including assessment for reassessment value of the assets based in the following year up to the date of approval of these audited financial results and current indications of future growths. Okay, now what they say, the last three lines, that was what I was searching for in this point 6. The railways were not fully operational, and the impact for new coaches or and the demand for new coaches and rolling stock was reduced in the current whole financial year. The delivery period for current order book has been rescheduled by railways. With the beginning of next financial year, the railways are expected to be fully operational, and we are optimistic that in the coming financial year, the demand for the coaches as well as for rolling stock will be good as per the data released by the Ministry of Railways. So they have themselves mentioned that probably the March quarter will also be depressed, so the numbers could still be slightly on the lower side or may go down, but I believe that there would be some amount of orders that would come in by February, March. And January itself, we had around 280, 300 more coaches running. So what that would entail to is that they might start getting orders from March onwards. So the numbers might not be that bad. So let's consider about the valuations part in detail. All right. So, Tirupati, thanks a lot for your contribution. No, I'm sorry. I would say that you avoid Ruchi Soya. That's my opinion. Avoid such stocks like Ruchi Soya altogether. All right. So, coming to the Frontier Springs thing. So probably June quarters will be pretty good. Let's just understand that March quarter and the results will be in may not be that great. So that's one thing. So eventually, what will happen? Stock may not perform till probably May, but from June quarter onwards, and the results would be somewhere in August. From there on in, the numbers are set to improve, and I believe that June 2020 was extremely bad, and I believe that the numbers for June 2021 or the first quarter of FY22 would be optically speaking would be very good. Quarter on quarter will be very good, and especially year on year it will start to show that things are normalizing. So you have to understand that railways are normalizing probably at the end, even after hotels, etc. So railways, once railways and everything opens up, this business will again kick in. So probably for the next 6 months we could see the stock fall even further from here. 340 is the price. So as the company has already mentioned, so probably from next year onwards, we will see normalization of results, and they have shown a sales growth of 20-25% over the last 6-7 years, 10 years, a profit growth of 30 odd percent over the last 10 years, and profit has surged over the last 10 years apart from this COVID year. So this pandemic has taken a toll on the railways, and we all know that once everything is operational from April, say even April or May, then you will see that June and September numbers will be totally different than what we have seen today. and December will be even better. So we have to play it for the FY22 numbers that would finally come in, and the total years numbers would come in by May of 2022, and then we'll see the difference. So probably from now on in for the next 15 months, the stock will make a bottom somewhere in April, March and April, and then will show the traction going forward. That's my understanding. Thanks a lot, Amit, for your contribution, your views on BASF India and Excel Industries. Very positive on Excel. I believe Excel can easily double from these levels with the kind of numbers that they have produced. BASF you can buy and just hold. It's like a portfolio stock similar to what Bayer Crop Sciences is, or Sanofi in pharma is, or Abbott is. So in that regard, you can buy and probably hold for 5 7 years. Excel could do really well over the next year and a half. All right, coming back to the stock price. So the stock has not performed that well. That is understandable. And I believe that 280 is possible in the next couple of days. And the lowest it can go to is probably around 220, 230 levels. If it goes to around 220 to 30 levels, it would be a buying opportunity. I don't see it breaking 220 to 25. Yes, I do see heavy selling coming in tomorrow because of the kind of results that have come in, but they will be buying at lower levels. So the bottom here could be around 220, 230. If somebody has the money, they can buy at around 240, 235 and hold for the next couple of years. Things will improve and numbers will show in. See, it is doing, if things are normal and 100% trains are running, then it would be doing 100 crores of sales, and market cap of the company will drop below 100 crores if the stock goes to 220, 230. So the valuations look extremely attractive. Debt is there, but debt is not that huge, so that's also a point. Thanks a lot, Sachin, for your contribution. AstraZeneca holding at 41.20. Should I keep adding with every fall? Buy only above 4,000. If it goes past your buy price, only then buy, otherwise don't add. Thank you for your contribution. So that's my view on Frontier Springs. Stock could go to 225, 230 eh, in the worst case scenario, or there could be a situation once the news come out that all trains are running and everything becomes normal by May, a stock may start to surge rather than fall, because we understand that the numbers will be bad for the March quarters as well. So there would be some kind of a reaction, a knee-jerk reaction for a week, and then stock should stabilize once the fall arrests. Thanks a lot, Jagdish, for your contribution. If you have any queries, you can put that forward. So that's about Frontier Springs. I'm ready to answer your queries. Kindly ask the questions through the super chat and super sticker features. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. So kindly do put your questions through. All right. Uh, so the questions that are coming in is for United Spirits. No point, or I have no views about the Sen stocks. That is my view on Sen stocks. I'm sorry. Uh, View on Root Mobile expensive, Tanla expensive. That's my opinion. Thanks a lot, Amit, for your contribution. Having Tata Elxsi at 2850 average, any targets for long term? I think you have bought it at extremely high levels. That's my understanding. If it goes to 2550 add, I think over the next 2 to 3 years, over the next 3 years period, it could still go up 50 to 70%. So that's my understanding. All right. A CDSL for me is a buy and hold, another portfolio kind of a stock that you can buy and probably hold on for a 4 to 6 year period or time frame. FL again is expensive. It is running high. Probably any 15 20% decline could be good buying opportunity. HUL on declines and at current levels can be bought, can give you 15 17% CAGR. Nestle at current levels looks extremely attractive. One can definitely get into something like a Nestle. Right. Britannia, I believe for 1 year, I think it can really go up. I still feel these are very attractive levels. I won't be surprised if it goes to 4200, 4300 on Britannia. IRCTC doing well. My first target on IRCTC, and a disclaimer, I am trading into the stock. 1950, 2000 is possible in the next 2 3 months. on IRCTC. Kilpest is a very good buying opportunity between 270 to 300. I think the results would not be that great for the next couple of quarters, but again, things will improve going forward. It's a good 4 year, 5 year play and could be a multi bagger over that 4 5 year period. Indoco remedies, I think better to get into proper, better, larger, you can say pharma companies or MNC pharma companies. That's my opinion. SBI Life and HDFC Life both are buys at every level, every little bit of fall, 7, 5%, 4, 5% fall. And they are buy. No opinion on DMCC, so I have no opinion there. Okay. I would avoid banks, especially small banks and financials and NBFCs, etc. I would avoid completely. Urja Global is an avoid, in my opinion. I would love to buy into consumption, pure consumption plays, than buying into other, you can say, renewable or energy plays. Bear crop is a buy at current levels. I don't think 4,700, 4,800 will be broken. Again, it's a portfolio kind of a stock, like I told about others, over a long period of time. Acrysel has run up a bit. On slight declines can be bought into. That's my opinion. Acrysel has been has done a lot from 200 levels. So that's my opinion there. Sequent, very positive. I made a video on Sequent Scientific. Disclaimer: I'm invested in the stock. I won't be surprised if it goes even higher from these levels, because there are larger, you can say, players invested at lower levels and who may want to get 10, 15x from the level that they have invested. Kindly watch my video on Sequent Scientific and you'll understand better. Abbott at current level, very attractive, 13,500 to 14,000, very strong support. Current levels can be bought into. Wait for 3 4 years, it will give you good 15 16% CAGR return. Ember is expensive, I believe, and I made a video on Ember. I think 24 2,500 would be good levels to get into Ember. So that's my point. HPCL, I would avoid. I would avoid such companies which are divestment candidates. I don't know when that would take place. So, government interference, I would still avoid those companies per se. I think escorts can be bought at any level closer to 1400. I think now 1350 to 1380 is a better support. Again, I'm trading into the stock. That's a disclaimer. I believe that 1750, 1800 is possible by July on escorts. I would avoid Galaxy Surfactants. I think SRF is a better stock to get into something, and there are other I have talked about, yeah, chemical companies which are good rather than getting into Galaxy Surfactants. Zelfmog, no opinion at this point of time. All right. Kindly, Amit, do not put question for Indigo time and again. I'm not going to answer that. The thing is, I don't know much about the company. I would avoid that and buy into mid or large cap companies. Okay. Tata Metallics, good to buy at 10 15% decline for a trading play. That's my opinion. But I would avoid the metal space again, as it is more cyclical in nature. We don't know when to get out. So getting in is easy and making money, paper profits is easy, but don't know when to get out. That is the issue with metal companies. Rain industries, we need to research a big. In my opinion, I have a different opinion to it, as it is a commodity kind of a play. So I would avoid. But if you have researched about the company well, you can definitely invest into it. InfoEdge at current levels is attractive. I still believe around 5,000 5,200. If it comes, it's a buy. Technically speaking, it can go up, although fundamentally speaking, it is expensive. Dixon is extremely expensive now, 19,000, 20,000. It may go to 22,500, but on declines, it can be bought into. That's my opinion on Dixon. Fine Organics, very good company. Any sort of declines you see or consolidation, you can buy. It's a very good chemical company, Fine Organics. Tata Chemicals can be bought on declines and bought for 2 3 4 year time frame. That would be a better thing to do. Polycab and Havels both are expensive at the moment. On major market crashes, you can buy into something like a Polycab or a Havel for that matter. Gland Pharma is a very good company. So major declines can be bought into. Numbers were fabulous. It's just that valuations are slightly stretched compared to other pharmaceutical companies. MGL over 5 years could be big. It could easily give you 100 to 125% return even from here. But on a short term basis, slightly expensive. On declines to 1050 could be good levels to buy. NBCC with a stop loss of 30. Again, I'm trading into the stock. I see 42, 44 coming in the next 3 to 4 months. I think there is a breakout that is imminent. If it crosses 34, 34.50, I'm just trading in the stock. It's not an investment bet, it is a good trading play. All right, guys. Thank you. Thanks a lot for being online and for being so supportive. Kindly support me on Patreon as well. That will help me grow the channel. That will help you also get me make more better videos. Subscribe to my channel and hit the bell icon. Thank you.